Hi, this is James Shug at Westpac with our London end of day wrap for Monday, June the 10th. Very much a day of deteriorating sentiment during the session, the European session. Things started off with markets sharply higher on the weekend news that Spain had asked for and would receive a bailout from the rest of Europe for the banking system. The Spanish banks are going to need possibly up to as much as 100 billion euros of recapitalisation because of the losses they are making on their mortgage books in particular. I mean, we're looking at 1 in 4 income earners unemployed in Spain. So mortgages for those families are clearly experiencing some difficulty. Spanish banks also have a whole range of mortgages on half-completed villas in abandoned tourist resorts. It's that sort of property market that's led to the losses that the Spanish banks are experiencing. The Spanish government, which managed to raise some funding last week at the 10-year part of the curve, costing them just over 6%, can't afford to raise 100 billion euros at that sort of pricing. Given the economy's in a multiple year recession, and given they're already experiencing a loss of investor confidence with last week, of course, Fitch downgrading the Spanish government by another 3 notches. So the bailout is going to go ahead. We don't know the details. We don't know if it's going to go through the EFSF fund or the ESM, which starts up next month. It won't involve the IMF though, and it won't involve extra austerity measures for the Spanish government. But at the same time, the Irish, whose bailout was largely because the government there guaranteed the banking system, which was also overextended to the property market, the Irish are looking to see the terms of their bailout eased, given that the Spanish are getting a bailout, it seems, for essentially the same reason. And of course, with the Greek bailout having renegotiated a few times and up in the air at the moment, but probably going to have to be renegotiated again. And it looks like the Irish might get a bit of a renegotiation of their bailout. The Portuguese, whose economy is continuing to slide, and they're having trouble meeting their budget deficit targets, they'll no doubt say, well, what about us? So the Spanish bailout that was announced at the weekend is going to cost not just up to 100 billion euros, but probably more than that, given that we're going to see we're likely to see renegotiation of other bailouts previously agreed. And then the issue, of course, is, does it stop there? I mean, and effectively the Spanish government is still going to have to guarantee the loans to the banks that need to be recapitalised. So it does actually add to the indebtedness of the Spanish government. So yet again, Europe's approaching the European sovereign debt crisis by giving more debt to the governments. Now, markets like the announcement. They don't like the lack of detail, and they don't like the prospects for this actually ruling a line under the European sovereign debt crisis. Certainly our view at Westpac is that it won't. There wasn't much data today. We had French industrial production, which rose in the month of April, but only because of a big jump in utility output, because the weather turned very cold. The manufacturing component of IP was actually down in the month of April. No US data to report. So I may as well just jump straight to the markets. Let's just pick up my papers, which I dropped. So just ahead of the European close, we saw the London market up 0.3%, the French market up the same amount, and the German market up 0.6%. But still, in positive territory. But the much stronger gains that we saw earlier in the session have been almost completely eroded. And in fact, the Dow, which was much higher in the futures market trading, it's currently down 1/3% at 12,511. The commodity markets have reflected that gradual loss of positive sentiment throughout the day, with oil prices now down 0.75% at $83.49 a barrel. Gold's down 0.2% at $1,588 an ounce, although copper prices are still higher at, with a 1.4% gain there. In European bond markets, we're looking at Spanish 10-year government bond yields now just under 6.5%, and Italian bond yields are just over 6% too. So very much a reignition of concern that we're getting close to the point where those larger economies are simply not going to be able to sustain their finances, notwithstanding the latest bailout news. In terms of the Aussie dollar, well, it was trading over parity at midnight London time last night. It's now trading down around 99.3 US cents. So the positive sentiment that's been eroding in equity markets and commodity markets is also feeding through to a weaker Australian dollar. We've got a few things to watch for in Australia today, Tuesday. The NAB is going to put out their latest business survey, and the Reserve Bank Governor Stevens, he's going to be speaking at the Prime Minister's Economic Forum in the morning, Australian Eastern Standard Time. That's about it from me for Monday the 10th. I'll be back again tomorrow.